the rand still on the back foot. We're starting to see a bit of pressure coming through for the local currency, although we did see a little bit of strength in early trade. We've got manufacturing out today, not something that does move the local currency. 2.7% for the month of November is what is expected.
Morning, Eleni. Yes, that would be today's highlight as far as the domestic calendar is concerned. Consensus estimates are expecting a figure of 2.7% year-on-year for November, as you mentioned, and that would be an improvement on the October year-on-year growth rate of 2.5%. And I think if you look at the November PMI, it was back above the key 50 level, and expectations of future business conditions were positive. There was also an improvement in the employment situation in the manufacturing sector. So all in all, one would be hoping for a much better performance than we saw in October.
Looking at the local currency, I mean, clearly it's really got to do with what we see on the euro-dollar front. It is about Eurozone's peripheral debt. Portugal, Spain, Italy coming to the market this week. But vote of confidence, Japan also buying up some of those bonds, too is China.
Absolutely, Eleni, and that announcement by Japan did give a boost to the euro yesterday. Japan actually has the second largest forex reserves in the world after China, so they certainly are putting their money where their mouth is and promising to support eurozone debt markets. And as you mentioned, with several key nations coming to the market this week with debt issuance, it certainly is going to be quite a tense time for the euro and for investors in that region. So the announcement by Japan certainly gave a boost to the euro and I think to the region as a whole.
Looking at the local currency, some would argue that the rand is looking slightly overbought in the short term. Would you agree with that? We're sitting at 6.83 to the greenback. Are you expecting some more pressure coming through for the local currency?
Well, absolutely. If you look at just prevailing conditions, particularly with investors currently worried about the Eurozone debt crisis, I think with the levels of risk rising, risk aversion rising, certainly one would expect risky assets that are perceived to be risky, such as the rand, to continue to take some pressure. So it wouldn't be surprising to see the rand continue to slide.
Nomvuyo, what else are you looking at this week going forward on the South African front that could affect the local currency? I mean, we had vehicle sales out yesterday, so a little bit of a vote of confidence in terms of what the consumer is experiencing. I mean, vehicle sales were up 29.6% over the month of December.
Yes, absolutely. I mean, the vehicle sales numbers were quite positive. They're up almost 25% for the whole of 2010 as compared to 2009. So certainly a boost there for the economy, and one would have expected that to filter into a bit of rand strength. But of course, at this point, I think everyone's looking to the Eurozone. I think the highlight this week is definitely manufacturing production, but we also do have some business confidence numbers out later in the week. But certainly manufacturing, I think, is, as far as the local calendar is concerned, would be the one to watch.